But talking about earnings, we have Piramal Pharma that reported a weak set of numbers in Q1. The revenue was down 29% sequentially. Margins saw a decline in terms of single digits as well. To talk to us more about their quarterly numbers, we have Nandini Piramal, Chairperson of Piramal Pharma, joining in with us to talk to us about that and what the company should be watching out for, what we'll be keeping an eye out on. The company is sticking to its guidance in the mid-single-digit revenue terms and mid-teens margins as well, year-on-year basis for FY26. Now, this is suggesting a pickup in terms of the next 3 quarters, especially in terms of margins. Nandini, good afternoon. And, can you actually tell us what we can expect in terms for the next 3 quarters from the company here?
Yes, we are sticking to our overall guidance of mid-single-digit revenue growth as well as mid-teen EBITDA and year-on-year growth in net profit. For us, Q1 is generally a very soft and quiet quarter, and Q4 is the highest quarter, and that's just how our customers actually like to buy products. So overall, I think we expect there will be H2 will pick up significantly over H1. And we think we're on track to meet that guidance so far.
On track to meet that guidance. But Nandini, the company has also indicated that it is on track to achieve that FY30 aspirations that you'll have of $2 billion revenue with 25% margin. How challenging is this environment, you would say right now, to achieve this? What is the risk here?
Currently, yes, there is uncertainty in the US market, and it is, I would say, a lot of it's due to inconsistent biotech funding that hasn't quite recovered as much as it should have. But I think as the year goes on, there will be more certainty, and people will kind of continue to make biotech investments. And again, we're pretty confident, and we believe that our aims of FY30 are achievable. It's $2 billion in revenue, a margin of 25%, and significant growth in net profit. We also, I think, are committed to continue to reduce debt. And all of this currently is organic.
Nandini, let's shift focus now and talk about your CDMO business. Now, what is the current order book over there that you have, especially for the next 3 quarters? Also, how has biotech funding crunch in the US impacted the business? And are you seeing any signs of recovery or improvement in this funding environment?
Overall, biotech funding has been inconsistent over the last year or so. That has led to a prolonged decision-making and a slowdown in decision-making cycles. However, I think where the CDMO business without the destocking event still grew at mid-teens, and so that we are seeing that's a continuation and a faith in our products and our ability to service our clients. Our network is very balanced across the US, UK, and India, and I think we believe that that gives us a good way of helping serve our clients to get medicines to patients faster. Over the last quarter, I'd like to say we've seen a broad pickup in growth and performance across both the US and UK, and that's helped balance the growth and the profitability for the company.
Nandini, complex hospitals was flat on a year-on-year basis in Q4, but has finally seen a pickup in, and is expected to see a pickup in the second half of the year. Can you tell us what has led to the flat performance? What is the pickup that you're predicting as of now as well?
I think overall, for us, generally, Q1 is a soft quarter. I think we expect we've got our new site online in Digwal, Telangana at the end of April, and over the year, we expect that on a market-by-market registrations to come through, and after that, then we will do orders to institutional hospitals and governments over the year. So some of the slowdown is due to timing differences, as we expect institutional orders to pick up more in H2 rather than in this Q2.
Nandini, just the last question from me, especially in terms of power brands and e-commerce, that led the growth that came in the consumer health segment this quarter. Are you expecting this growth to sustain going forward as well?
I think we like to think so. I think we've been focusing a lot on, how do we actually do good promotions and good products. For us, our power brands have been doing well. And I do think that the Indian consumer likes the products that we're selling, and we think that they actually help serve their needs and provide great value for money.
Okay, Nandini, thank you so much for joining us this afternoon on CNBC TV18, giving us an insight in terms of what we should be expecting from the company in FY26.